Hi, and welcome back to the Vancouver Life Real Estate channel. We have created a 5-part mortgage series with our colleague and friend Mychal Ferreira from the Bank of Montreal. In this series, he answers the most asked questions when it comes to financing real estate. The topics include how and when to finance a pre-sale condo, your options when it comes to down payments on a home, how and how much equity you can access within an existing property, the best ways to finance investment properties, and lastly, how to purchase real estate within a corporation, especially good episode for my realtors and other business owners who operate as an incorporated business. Our guest Mychal has been with the Bank of Montreal for over 15 years now and consistently finances more real estate than any other mortgage specialist within that organization across all of Canada. Safe to say, he knows what he's talking about and has some incredibly valuable information to share with you. The 5-part series launches on Thursday, February the 23rd, and new releases will come out every Thursday at 3 p.m. They're quick 10-minute episodes that get right to the topic at hand. Be sure to check them all out, as I found them incredibly informative and know that you will too. All right, let's get into today's episode. On this episode of the mortgage series with Mychal Ferreira, we are discussing pre-sale financing and what the options are. A lot of people out there who buy pre-sales may not be aware of all the options to them, both before, during, and after completion of their homes or investment properties. So welcome back to this episode. Mychal, thank you so much for being here today.
Thanks, guys. Good to be back.
Thank you so much. So let's dive right into it, right off the top. Yeah. Pre-sales. Can you get financing before a home is built?
Absolutely. This is something that a lot of people don't know, but you can get a full unconditional approval within 7 days of your purchase, where we hold a rate, a full approval, and an appraisal of the property. So essentially the value you paid is the value that's secured. So your deposit's good. And we'll secure a rate for up to 3 years. So if rates go up, you have a capped rate that will not exceed that.
Gotcha. So you mentioned 3 years. Is 3 years the maximum time frame prior to completion that you can get approval?
Right now, 3 years is the max. There are talks that could change in the next few years, as a lot of projects in Vancouver are 4 years plus. But at the moment, 3 years is the max.
What about those projects? Let's say they come out and they say completion is 3 years, and it gets delayed 18 months, as they do. What happens there?
So, that's a tricky thing, right? I mean, at the end of the day, the product is meant for 3 years. So when we know that we're exactly within a 3-year range, what I typically do is I do an initial approval to make sure that, one, we qualify, right? I go over any future plans that they have. So if, are you thinking about buying a car? Are you thinking about buying another property? And we try to keep that pretty much nice and clean. No, we're not. Okay, great. Let's revisit this approval in 6 months, refresh it so we buy ourselves time. Where there's delays, essentially at the 3-year mark, if we've now passed that, we will need to look at that again. But usually along the way, we're keeping track of the developer. What is their track record? How long have they run? And the only time we really ran into any major issues was during COVID.
So Mychal, out of curiosity, if you're able to secure a mortgage for 3 years, what happens if the value of the property or the market is significantly different at the time of completion versus when you actually got that loan secured?
So there's two ways actually, and a lot of people don't know this. So if you've bought a pre-sale and it has significantly appreciated in a 3-year time frame, or any time frame really within the 3 years, we can actually lend on the appreciated value. So say you've put in your 20% down to the developer and it's gone up, $200,000. We could lend based on the appreciated value, and you could actually get money back at completion. And I've had some cases where people have got a portion of their down payment back and they could flip it and buy another one. Now, on the flip side of that, where we're seeing kind of more often now, if a project has reduced in value with prices being lower, if you've done this, you don't need to worry because we've secured the value from the day.
So you're protecting that side.
Exactly. Right. So we get all the benefit of the upside, none of the downside.
Wow, that's a very good reason to get that done in advance.
Yeah, there's literally no downside to it. And I think where people get caught up and maybe kind of lose track of the importance of this is the rate. Now, the rate is it's a capped rate. So it's usually significantly higher than current rates, about 50 basis points or so. So if a rate is 5%, we're at 5.5%. And we're holding that for 3 years. So it's not that bad. Go back a year, and I was having conversations with people, and the 3-year capped rate was at 2.5% a year ago. So you can imagine those people who locked in, who are closing now and next year at 2.5%, where rates are 5+.
Laughing.
It's amazing, right? Yeah. So, I think now the rates will likely come down, but I don't think that there's any harm, because once you get within 130 days of completion, we will lock in the best rate for you at that time.
Right.
So there's literally no downside. You still get to participate when rates are low, but you keep your rate if rates are high.
Okay, for clarification then, let's say we lock in a rate of, let's just call it 5% for argument's sake today. In 2 years from now, there's still 1 year prior to completion, but rates are at 3%. Can I come to you? Do I have to say, hey, can you requalify me now? Or do you automatically kind of requalify people as the rates change?
Yeah. So, obviously there's a little bit of responsibility on the person applying here, right? We try to manage this as much as we can, but when we're talking about hundreds of applications, it's tough. So if you notice that rates are coming down and you have a capped rate at 5% and rates are 3%, it's very easy. We can go in there and just reset the rate for you in most cases. If we need to do an extension at that time, we also can, right? But again, anytime we're passing that 36-month threshold, we would re-pull your credit, right? So if we don't need to, and we're still within that bubble, we could refresh for the time remaining. So if there's a year left, we can do a 1-year cap rate at any one of the 3 to 10 year fixed terms and refresh it at a lower rate.
Gotcha. Okay. Now, life can happen over 3 years. Right?
As it does.
I've got a fantastic job today. At year 2, I lose my job. Something happens. I can't even work by the time this thing completes.
Yeah.
How does the bank look at me then?
So this no. So the purpose of a capped rate deal is we do all of the underwriting up front.
Okay.
So we verified all of the income and all of the employment. Now, in theory, we don't need to requalify at any point inside of the 3 years. But you should, however, have that discussion with your lender if you've lost your job. There's obviously affordability issues there that you might want to tackle and have an honest conversation. But when it comes to these types of deals, the point is that we don't have to redo this later. We are doing it now to confirm that yes, 3 years from now or within the 3 years, you will qualify and you don't have to worry.
So if you lose your job, but you get another one and it pays a very similar amount, really there's not much to worry about.
Yeah. And again, I encourage people to have that conversation with their lender, especially if their employment has increased. Of course, there's no issues. But, if you lose your job, you don't want to be taking on a mortgage if you can't afford to make the payments, right?
100%. Yes, absolutely.
And it's not the main purpose really of these is to ensure that a lot of people buy pre-sales and you're talking years in advance, 1, 2, 3 years away, sometimes 4, sometimes 5. How do you hedge that? How do you know, in 2019 that the world was going to get hit with COVID?
You don't.
You don't. So to me, it's something that absolutely needs to happen. Do it within your 7 days. Ensure that when you qualify, your deposit's protected and you know what your payment's going to be in the worst case scenario.
Yeah.
And I would say that from what I have seen, the amount of people that buy pre-sales versus get approvals, it's a very, very small number. I'd say about 20-30% of people actually do it, which is crazy to me. You're putting, several $100,000 down with, no protection. So, I believe that everyone needs to explore that.
Yeah, I think it begs discussing even further. If you were to buy something that, let's say, had $1 million price tag, and then similar to what we saw happen in 2019, people were then completing with an $800,000 appraisal. And the bank at that point said, well, guess who's coming up with the $200K spread?
Yeah.
You are, and it has to be cash.
Yes. Yeah.
That obviously caused issues. So you're saying with that pre-approval in place, even if the appraisal technically drops to that amount, you guys will still finance.
Yeah, because we've done the appraisal at the time of purchase, right? So obviously if you're buying something at the time, the appraisal should come in because it's, relevant pricing to the time. But that's the appraisal that we're going to hold for 36 months. So we don't actually reappraise the property again unless there's appreciation and you want to access that equity.
Right.
But if not, if everything is the same way, then we'll leave it, right?
Very interesting. Okay, so what if the project is really big and it has like a 6-year horizon for completion? When should they talk to you?
We have that.
No, there is, and you know, this is a lot of lenders right now, you know, Bank of Montreal included, are looking at these longer projects and trying to find solutions. There are some that will do 4 or 5 years, but the rate is more of a variable rate and can fluctuate. But we are looking at a 5-year turnaround now for the capped rates. For people that are in that situation, it really depends on, you know, who your lender is, right? So if you're talking to us at Bank of Montreal, then you do want to make sure that you're within that 3-year bubble. So not that I would recommend waiting 2.5 years, 3 years before you even explore something. I think you still need to look at it and get the best option at the time. Yeah, absolutely. Because it's not a lot of these projects are starting to just go crazy.
I was just going to say, I mean, in a 6-year project, I mean, the ideal time frame maybe was 3 to 4.
Yeah.
And then for whatever reasons, COVID happens.
Yeah.
You know, delays take place, supply chain, I can't get the parts or whatever it is.
Yeah.
How does, you know, the bank after that 3-year portion is going to have to, I guess, reassess the whole thing right over again.
Absolutely. I mean, everything has its limitations, right? And when you're buying a project, you are taking on some level of risk,
course,
right? There's just no way around it. So, you know, if you're buying a 5-year project, know that could be a 5.5, 6-year project by the time it's done. So there's risk there. But, you know, it doesn't mean you can't get pre-approved at the start, hold it for 3 years, midway through, do another one.
Look at it again.
Right, yeah. I mean, you're going to have an idea of where you need to be. So,
yeah.
And then hopefully in 6 years, we see appreciation.
Ideally.
Which we usually do, yeah.
As long as you're not in Alberta. Yes, unfortunately.
Do these rate holds work across the province, across the country? Where can people buy?
Yeah, so we can do them across the country. We're actually only seeing these kinds of projects that are lasting this long in the GTA, GTV, so basically Vancouver, Toronto, right? Obviously, there's other parts in Montreal and in Calgary and Edmonton, but majority of them are much shorter. The passing the 3 years is really a Toronto, Vancouver thing, right? But yeah, we do them across the country, so.
Perfect. Well, this has been incredibly informative for anybody looking to buy pre-sale, or maybe they have one and then they realize they can now get financing prior to closing. What's the best way to find you?
You can reach out by phone number, email, or Instagram.
Great. We will include all those in the comments below. Thanks as always for watching and listening.